GM, everyone, we are live. Welcome back. This is, as you know, the SolanaFloor weekly recap where we break down Solana's biggest stories straight from the SolanaFloor newsroom. I'm joined, as always, by the wonderful Mr. Finn Miller. Finn, GM, so how you doing?
GM Jack, how are we getting on?
We are doing good. And, of course, the one and only Mr. Thomas Bahamas joins us from across the pond. GM, Thomas.
GM. Happy Friday, everybody.
Happy Friday. Now, all things considered, I think it is a happy Friday, but it's been a big week. Another major DeFi exploit. This time it wasn't in Solana. It was on Ethereum, as you all know by now, I'm sure. But the contagion is hitting us anyway. We've got a fascinating stablecoin power shift that's playing out in real time between USDC, Circle, USDT, Tether. Things are happening. Very interesting. We'll get into the stablecoin landscape in a second. Toly's throwing down a bit of a hacker challenge. Toly gets involved, you know it's serious. He's put 5 SOL on the line. There are some other winnables out there, but we'll get into that story in just a second. And a Memecoin culture debate that's raging on Solana as well, which I found very interesting given the timing of everything. The backdrop of April being a horrible, horrible month for DeFi, but that's a very interesting one. Now, Polymarket and Kalshi, 2 multi-billion-dollar prediction markets, are entering Perps. Very interesting. We've also got a $526 million gold fund being tokenized by an 88-year-old Singaporean bank. Huge. It's been a busy week. But let's do a bit of a vibe check, bit of a price check before we dive into Finn's spicy newsletter. BTC right now is around $78,000. Not bad. ETH is just below $2,400. And Sol, happy to report that it's trading at around $86. Last Friday, we were quite happy about the fact that Sol had briefly touched $90. So again, all things considered, we are holding strong. Definitely far away from the April 2nd lows of $77, which of course was right after that $285 billion drift hack. So it's safe to say Sol's relative strength this week is impressive, and I think it's driven in large part by ETFs passing $1 billion in inflows. So institutional demand, we've been talking about this for a long time. It is strong. It is holding. The guys in suits seem to be a lot more bullish than CT at the moment. So we'll see when prices catch up with the fundamentals. Now, three sort of external, adjacent, interesting developments that I want to touch on very quickly before we go to a sentiment check from Finn and TB. The total crypto market cap, this surprised me this morning, is actually up around 0.5%. It's 0.5% today. I would have expected that to be significantly down considering everything that's happening in Ethereum land with DeFi TVL dropping. But we're possibly looking at another Green Friday, which this has to be said is rare in 2026. And again, in April, considering how bad the optics have been, quite surprising. I'm very impressed and very happy. So zooming out, we have some conflicts, naval blockade in the Middle East, not looking great on that side. Energy markets, insane amounts of pressure, massive oil price volatility, and all of this cumulatively is impacting global inflation risk very negatively. To top it all off, we have the former IMF deputy director, who we've been covering over in Videoland on SolanaFloor's YouTube channel, said that we're about 4 to 8 weeks away from a global meltdown, a global recession, unless we open the Straits of Hormuz. So the time pressure is very, very much real. And we're going to be touching on prediction markets in a second. So it's worth mentioning here that related to Polymarket, a US soldier was charged for essentially using insider information, insider trading, some classified details, and he ended up making $400,000 of profit on Polymarket. Following that, President Trump was asked what he thinks of prediction markets, and he basically said, look, the world is turning into a massive casino. I'm not a big fan, but it is what it is. We'll be unpacking all of that today. So here's your reminder, no crying in the casino. Finn, with that, you've put 6 banger stories in this week's newsletter, and I suspect you and I and Thomas and I and everyone who's listening, we're going to have some ideological disagreements around some of the stories, in particular story number 2. But before we get there, Finn, what are we feeling sentiment-wise? It's been a very rough week in DeFi. Prices somehow holding up. What's going on?
Yeah, listen, Jack, sentiment in DeFi is arguably as worse as it's ever been at the moment. I think a lot of people who've been in the industry for a very, very long time, they're starting to actually question why we're here in the first place. With all the hacks that we've been having, I think we're over $600 million lost in April alone. It's the 6th largest month for hacks in DeFi history. No, it's not getting better, right? People continue to lose money. Applications continue to get exploited. And at this point, the trade-off isn't really there anymore, is what a lot of people are saying. They're saying DeFi innovation has stagnated. Is it worth, depositing my net worth into applications like Aave for 4 or 5% yield if it means that one day I wake up and it all disappears? So look, dark days for DeFi. I'm really hoping that we can turn it around in the days to come. But Thomas, over in traders land, looking in the order books, what's the sentiment like over there for you?
Yeah, I mean, I guess first of all, like we can't get past the DeFi issues that we're facing right now. DeFi is in a tough spot. I just got through 2 videos of this on the state of it, and I overall think we're going to be fine in DeFi, but I think that's kind of on the top of everyone's mind right now. One thing that is pretty positive that I don't think we mentioned yet, or even is necessarily in the newsletter, is Twitter. So X has changed their algorithm to where you can actually adjust it to just see crypto stuff. So I have seen more crypto on my timeline than I've seen in years. So I think that I think that has like ripple effects as well. So I'm excited about that. That's not necessarily like directly into trading, but I think that a lot of that like euphoria comes from people posting on X and seeing it more is actually pretty interesting. So we'll see how that does. As far as trading goes, I mean, I don't know. Perps activity seems to be up a little bit. Spot trading seems to be down quite a bit. Meme coins, it seems like Ethereum is finally catching up on meme coins and launching a ton of massive meme coins right now. I'm not, in those trenches, so I don't exactly know, what's going on. I know that meme coins have been kind of, struggling for a little bit on Solana. So hopefully they do come back. And we woke up this morning to like a pretty big green candle on the Seeker token. So I'm not exactly sure what's going on there either. But yeah, I mean, everyone seems like they're buying stocks and apparently the Seeker token. But yeah, I'm excited to dig into this. And
Yeah, I think the Ethereum meme coin thing is quite peculiar because it's a completely different game over there, right? Like on Solana, we get very used to being able to swap in and out of things, and it costs a fraction of a cent. Whereas on Ethereum, I remember trying to trade Ethereum meme coins back in the day, and it's like $100 through a round trip in and out on a lot of swaps. That was obviously a different time. Gas fees were a lot higher then, and it's obviously a lot lower now. But I think culturally, Ethereum, you need to be moving a lot more size to make it worth it, and that kind of changes the whole game. So yeah, really,
yeah,
really keen to
well,
pull that a bit later on.
yeah, and I mean they have the whales to do it, right? I feel like there's always like ETH whales are in. They were, I mean, they had like a pretty big meme coin season before it actually came to Solana, right? So a lot of people point to, hey, the reason why Solana had such a good meme coin season was a lot of people from ETH moved over and would launch, 300K into a meme coin. So now they're just doing it on their own chain, I guess, is what it looks like, right?
Yeah, well, I mean, and that's where it all started as well. We love to say that Solana is the home of meme coin activity, but obviously it had to come from somewhere first, and Ethereum has actually been doing that for a very, very long time. I think Jack's having some technical issues, but we might as well plow right ahead into the newsletter.
Sounds good.
Yeah. So Thomas, the KelpDAO hack. It is pretty devastating. Look, April, very, very difficult month for hacks in general. KelpDAO, obviously Ethereum based, so we kind of didn't feel the squeeze so much on Solana as we might have otherwise. But what basically happened in this one is that North Korean hackers, obviously it hasn't been confirmed, but we're all pretty inclined to agree that it follows the patterns that DPKR is using a lot. They were able to exploit the KelpDAO bridge, which was powered by Layer 0. Obviously, again, it was a social engineering hack. So unfortunately, it came down to compromisation. And what ended up happening was that the hackers were able to artificially convince the bridge to release around, I believe, 165,000 RS ETH to the attacker's wallet. That was then posted into Aave, and the hackers were able to borrow regular ETH against that. And effectively, it has left Aave with a tremendous amount of bad debt. Now, the community was divided on what happened next. So obviously, Ethereum DeFi was an absolute bits over this. A lot of depositors started withdrawing their funds. There's a massive liquidity squeeze on Ethereum itself. But there is some interesting moves that have kind of prompted a bit of discussion. The Arbitrum Security Council took emergency action to freeze 30,766 ETH in the attacker's wallet. That's worth about $70 million. And again, this has prompted the age-old decentralization debate. So it's very, very difficult to kind of pick a side here, I think. Obviously, a lot of people came to this industry because they believed in permissionlessness, they believed in censorship resistance, and a lot of that has actually been kind of thrown in the gutter at this stage. But I think if that means that you can recover a lot of funds, then it might be worthwhile. So there's lots to unpack there. Aave has been hit particularly hard. So Aave's TVL has dropped by about $12 billion in the aftermath of this event. And we have felt this a little bit on Solana as well. So lenders across the crypto ecosystem are starting to feel the squeeze. They're pulling their liquidity out of protocols like Camino, which has caused a spike in utilization rates. So a lot of people lending money into vaults all of a sudden find their capital being used extremely tensely. And I think effectively there's actually not enough capital to go around at this stage. It has evened out a wee bit, but on Monday, Tuesday, things are looking a bit scary there. Thomas, where do you stand on this decentralization debate that has been rocking crypto at the moment?
Yeah, it's tough, right? I kind of see the struggle. I see both sides of it. For like how this happened and the people that were affected, like a lot of people are affected from this, right? Like if you take a step back and you like step out of the crypto ecosystem, like Ethereum and Aave are like staples of the industry, right? Like when you think of DeFi, like I would say Aave is probably the most well-known DeFi protocol, most battle-tested, and they're left with, was it $190 million in bad debt? So
$196 million in bad debt. Yeah.
it is, I mean, there's no way that you can look at this and say that DeFi, isn't taking a massive hit from this. And the fact that they were able to claw back 70 million of that from, what was I not like 100% proved, but it's pretty much like assumed that it was North Korea, I think is a win. Right. Like I think, I saw a bunch of people cheering for it in the beginning. I was like, why are you guys cheering for this? This is supposed to be decentralized. You're not supposed to be able to just pull funds out of a wallet. But maybe that is exactly what L2s are for. Right. No, I mean, I don't think anybody is necessarily saying that a lot of these L2s are extremely decentralized. right? You know, a lot of people, I mean, that was kind of like Solana's main pitch was like, hey, none of these L2s are decentralized. We're a full-blown decentralized L1 on Solana, where these L2s are supposed to be able to compete on speed, but it's basically just a multi-sig. And they proved this out, right? Well, the Security Council was 9 out of 12 signers that basically approved pulling funds out of a wallet. So, I mean, to a lot of people, a lot of the decentralized maxis, like that is a line that you don't cross, like, right? Like, you know, like property, you know, that's their sovereign property in that wallet. However, you know, I mean, if it's stolen funds and it's pretty much 100% that they were stolen, you could track the wallet. Maybe it's the right thing to do. And maybe that's exactly what, you know, L2 security provides for people. So I don't know, you know, I sympathize with the people that were hacked, but I don't know, you know, like they were never, like an L2 was never supposed to be that decentralized in the first place. So I don't see the problem with it, I guess. I don't know. Where do you stand on that, Finn?
Look, I think I have kind of changed my mind on this over the years. So, you know, if we go back a few years, I get into crypto for the very first time, bright-eyed, bushy-tailed, sold this idea of, you know, purely independent self-custodial money. And obviously I was completely crypto-pilled. But now after seeing so many hacks over the years, even this year alone has been staggering. I think if you asked anybody who lost money in any of these hacks at any point, if they would reconsider their decentralization stance to get their money back, I think ubiquitously they would agree with you, and they would say, yep, sure, I'll rethink what decentralization means if it means that I can actually get my money back. So that's my first point. And I think the second point that's come out of this that I find really appealing is that DeFi is actually coming together in this instance. We saw with the drift hack, we saw Tether step in to kind of backstop those losses and help drift get back on its feet. Over in Ethereum land, we've seen a lot of teams come out and they're starting to pull funds together to fill the gap in Aave and in Ethereum DeFi. So I think Mantle has contributed a huge amount. The Aave founder has popped in about, I think, 5,000 ETH of his own funds. EtherFi, Lido, these teams are all chipping in a huge amount to help get Ethereum DeFi running again, and trying to kind of reconsolidate those losses. So yes, hacks happen. I think the DeFi community is rallying around this. Everyone's kind of chipping in to get DeFi back on its feet. And I think it's a very encouraging sign. But obviously, there's a lot more to this that can be said. Jack, you're on the edge of the decentralization trend. Where do you stand on this?
Yeah, so I'm definitely in the category of people who have slightly shifted their position on this over the years. If you'd asked me in 2022, when, you know, hacks were bad, we had $600 million hacks, bridges, smart contract exploits, I still sort of felt that DeFi was relatively in its infancy at that point, and that we should not sacrifice our ideals, our values, and that decentralization was very important. We should not be freezing funds, and that the industry would sort of recover. Fast forward into the age of AI, fast forward into the age of DPRK. And to be honest with you, I think if we can make extreme decisions in extreme cases, maybe we should. And you mentioned there getting things back on track, fixing things. I'm back after a slight technical glitch there. I'm going to blame South European internet, South European infrastructure there. But I think this is a good moment to dive into your newsletter, Finn, because the introduction to your newsletter touches on a few of these points and how DeFi is essentially banded together against this state-sponsored actor, financial terrorism, some people have called it. It's not looking good. You mentioned $600 million in a month alone. Again, not looking good, but you cover, I think, the reaction very, very well. So I'm going to pull up your newsletter here, Finn. What's the sort of overarching sentiment that you get from this discrepancy between the Ethereum ecosystem and the Solana ecosystem, and how these two ecosystems have reacted to these horrible hacks?
Yeah, we were discussing this before you got back from your technical South European difficulties, Jack. Look, I think the biggest takeaway for me in this respect, after everything that's happened that we've just spoken about, is that Ethereum DeFi has actually kind of propped themselves up. Everyone's come in to support each other. EtherFi, Lido, all these teams that have been around for a very, very long time, they're all, you know, standing there shoulder to shoulder and trying to make things better. We've had that in a different way on Solana. So Solana's approach was to deploy Stride and Siren and get these standardized setups to help build security practices from the ground up. That's one way. On the Ethereum side, teams are basically just pouring money together to block the hole and get these apps back on their feet. So I would like to see kind of almost a standardized DeFi rating system in many ways that tells people risk adjusted rates, so that people can kind of have an informed idea about how secure their protocols really are. I think we probably need to steer away from social engineering risks. I think there's been some great work done towards that. Because as we've discussed before, smart contract security is incredibly watertight these days. We've got formal verification. We've got incredible teams working on making code as bulletproof as possible. So yeah, more efforts need to be made on the social engineering side and on the operational security side is my kind of biggest takeaway at this stage.
Now,
yeah, that's
with that, in the interest of time, following my technical glitch, I think we should get on with story number one because it's a spicy one. I'm going to read the headline. We can sort of run through it. I want to share some thoughts, some deep-seated issues that I have with what's been going on here. Story number one's headline, as you can see on screen, is $280 million KelpDAO exploit forces DeFi liquidity crunch. Is Solana safe? Spicy one there. It's, as we were discussing, it's another devastating week. $280 million is a huge amount. By the way, the sharper readers and listeners among us will probably realize that we said 280 million. It's actually $290 million now. That's because things change, and the SolanaFloor team is just so fast at covering the news that by the time it's out, things change. Now, Lazarus Group, we mentioned DPRK, their fingerprints are all over this again. So, North Korea strikes again. Finn, without belaboring this too much, let's sort of run through the key stats. Why is the Solana ecosystem also impacted by this Ethereum ecosystem hack? I think that's what most people are wondering.
Yeah, so we touched on this briefly. There was a lot of fear in DeFi markets just with people wanting to pull their funds out of all kinds of protocols. We did touch on this earlier, Jack, while you were out, so I'll race through it very briefly. Basically, when a lot of people start pulling their capital out of lending markets face a shortage of money, which makes it very difficult for lenders to borrow if all the capital is being used. And it also spikes lending rates and borrowing rates for a lot of the users. So what ended up happening is that we had a bit of a liquidity crunch across the entire ecosystem. Nobody was able to access their funds anymore. Borrowing rates on stablecoins on Solana particularly went quite high. We jumped from around 5-6% up to about 8 or 9. So a lot of people who were borrowing a lot of funds faced a bit of a premium there. And yeah, it was a scary moment. People are starting to refill these lending markets with a bit more capital, so things are easing off. But it was quite a tense moment there for a while.
Can you sort of just pause briefly there and unpack utilization rates? What does it mean for utilization rates to hit 100%? Let's say I'm a Solana DeFi user. I'm lending some of my stable coins out, or I'm borrowing against them. Let's say I'm using Camino and I see 100% in the headline. It sort of scares me. What does that mean for me?
So lending pools are quite a simple paradigm in many respects. If we have a lending pool, and let's say there's $10 in there, if $9 of that is being borrowed by people to use elsewhere in DeFi, we're at a 90% utilization rate. If a crunch arrives, as we've described, and all of the money that's in that pool has been borrowed by lenders, then there's no money left to go around. We hit a 100% utilization rate, and essentially there's no more money in that pool for borrowers to take from. And if you're a lender and you want to get your money back, you actually aren't able to because it's not there. It's because borrowers have taken it all as well. So if you hit 100% utilization rate, then there's actually no way for lenders to get their capital back. So liquidity crunch is a very scary moment. Fortunately, in this respect, the capital has been refilled by lenders. It's dropped on a lot of Solana's lending markets. It has dropped back to around 90% or so. So we're all in the clear for now. But yeah, people need to remember that this can happen. Lending stablecoins out isn't a bulletproof 100% safe utility there.
Right, and it also can be a problem for the protocol in this case. Aave, we know, well, it's mentioned here in your article as well, that there's $196 million in bad debt. Just to very briefly gloss over that, bad debt in DeFi is essentially when the loans can't be repaid, they can't be liquidated. So again, Aave in this case is owed about $196 million, but they can't get that money back. So Aave is now left holding collateral that's worth far less than it originally was, around $196 million, which they lent out. So people like you and I go there, we put up our collateral, we borrow $196 million against it, and then that collateral gets wrecked by North Korea, allegedly, and then Aave is now holding close to $200 million of bad debt, which they can't get. So just wanted to clear that up so we get a sense of the impact here. TB, you've spent, I think, the best part of April covering both North Korean hacks and what's happened to DeFi as a result. Do you get a sense that we are sort of in the clear with all of these responses?
You know, I don't think so. You know, like especially with this KelpDAO attack, like we weren't monetarily affected on Solana, right? Like we weren't like directly, you know, exposed to this like dollar wise, but reputation wise, DeFi is still taking the hit, right? You know, you're not seeing as much lending, you're not seeing as much TVL on Solana even as there was before. And I think a lot of it comes down to I don't know if the risk versus reward is really there, you know, especially on Ethereum, you know, when they were in a lot of these pools or these vaults on Aave, you know, they were getting 3-4%, where, you know, that like you look at receiving 3% per year and risking 100% of your capital to get that, like that doesn't square for me. And I mean, you think that something's bulletproof and now it's not. It kind of takes away a lot of the trust that was in there. And I think it's going to open up people's eyes, right? You know, like when I think about lending protocols, I don't go look at the smart contracts. I don't look at where those funds are actually going, but I should, right? You know, if I was going to be lending right now, which, you know, I'm currently not, right? Like I don't have any like big DeFi positions open, and I think that a lot of people don't. But if I was to open some up, like I'm going to do some digging. I'm going to look into it. I'm not just going to YOLO into whatever is like the highest yield right now. So I think a lot of people are in that boat, right?
Times have changed. We're no longer aping into things. We're actually checking if we have protocol risk and contagion risk. And yeah, unforeseen circumstances. In the interest of time, let's hop over to story number 2. The headline, as you can see, is Tether's USDT supply on Solana jumps over 16% in just 7 days. Is Solana dropping USDC? We briefly touched on this last week as well. We sort of jokingly, between the three of us, created a bit of a betting pool as to what percentage of Solana stablecoin market share Circle would lose to Tether. People like Mike Dudas have gone out and made some spicy comments. Finn, it's starting to look like something is shifting as far as the power balance between Tether and Circle goes within Solana land. What are the key numbers here?
Yeah, look, so Jack, USDT supply on Solana has actually jumped around 16% in just 7 days, which is a pretty remarkable turnaround for an ecosystem that has actually got billions in TVL already. You know, I was expecting a slow, studious drip feed over. I was expecting, you know, maybe 3 to 5% in the first week, but no, we've come straight out the gate with 16.39. A lot of that's been driven by new incentives coming out from teams like Loopscale, like Onray. A lot of DeFi apps are working to integrate USDT as much as possible. You know, the events of the drift hack and Circle's lack of involvement have left a pretty bitter taste in a lot of people's mouths. There was even a comment just dropped in the live chat there that you could bring up. Circle should have stopped it. What a scam. Yeah, scam is a big word, but yeah, I agree. I think Circle should have stepped in and they should have intercepted those funds. And look, at this stage, Tether is making great headway into Solana. Obviously, Circle is still the dominant stablecoin. I think Circle still's got around 50.69% of stablecoin market share on Solana. Still very dominant, but it is starting to slip. The cracks are showing. Thomas, you're quite deeply integrated in the Solana DeFi ecosystem. Do you think that the 16% jump is a flash in the pan? Is this a short-term change? Or do you think we can expect to see this kind of extend even further until Tether eventually takes Circle's place?
I think this is a structural change, right? Like I think Solana is going to move over to Tether. I mean, for Circle to be, you know, centralized and unwilling to act, you know, when they had 8 hours where North Korea was moving funds from Solana through their protocol, you know, to Ethereum, and they didn't do anything. I think that makes things clear, right? I don't see, you know, for anybody that's actively watching this, why they would choose to use USDC over Tether at this point. Tether goes through a lot of this. I think they've actually frozen something like $4.2 billion in hacked funds over the years. So they are quicker to act. They are a lot more like DeFi native. They're crypto native. I mean, they've been around. They were the first stablecoin pretty much at this point. So I think that there is a lot of advantages, and I think people are waking up to it. So I personally see this as like, you know, this is a big change for Circle. Like I didn't see how we could possibly get off of USDC before, but this is one of the ways, right? To not act while people are actively losing their funds. Like if I got $1 hacked in the drift hack and USDC didn't freeze it while they had 8 hours to do it, I would be pissed. Like I would actively say, like, why didn't they do this? I'll just use Tether next time. So I think they messed up a lot of their trust that they had. And they're probably going to struggle moving forward.
They
What do you
did,
think?
and yeah, our print team has put together this sort of collage of Solana community members sort of banding together and supporting Tether's decision, and suggesting that maybe we sort of reduce our dependency on Circle. We have covered the Solana stablecoin landscape extensively. Curious what our audience thinks as far as the volatility of this shift goes. How quickly are we going to massively reduce, our Circle dependency and sort of move over to Tether? I don't know. Circle's definitely losing the PR war as far as we can see at the moment. However, if you zoom out of Solana land, there's a bit of a different picture emerging. If maybe you missed the story because hacks and stuff were happening. We mentioned Mike Dudas there. Not being super polite about Jeremy Allaire, not being super polite about Circle's decisions, but Jeremy Allaire was literally named among the list of Times Magazine's 100 most influential people of Solana, 2026, pardon me. So I guess, if you're Jeremy Allaire, you're thinking, listen, I'm a billionaire. We went public. We had this IPO. I've got loads of money in the bank. I'd rather cozy up to the regulators in Washington, D.C. than be best friends with the Solana ecosystem. So you win some, you lose some. But as far as that list goes, it's certainly better than being Ben Pasternak and many, many other people that we've seen named on the Forbes 30 under 30 list and then find themselves on the wrong side of the law. But that's a debate for a different day. For now, let's move over to story number 3. Unfortunately, this one, I have to say, stings. It certainly stings if you are a Solana maxi. It probably stings if you had this belief that Solana was in a position to compete with Hyperliquid as far as the Perps landscape goes. Finn, why is this painful for Solana maxis? Is there a way out? Solana feels sidelined once again. What's going on?
Yes, so the headline is Polymarket Kalshi into Perps Arena, Solana sidelined in both sectors. So the event is that Polymarket and Kalshi, the duopoly of prediction markets, if you will, 2 of the biggest crypto apps in the world at the moment, they're both expanding their products into Perps, which is also becoming probably the most popular way to trade crypto at this point. It's a staggering move. It's massive. Polymarket and Kalshi have been dominating. Hyperliquid obviously is crushing it in the Perps game itself. So it seems like a bit of a no-brainer for Kalshi and Polymarket to jump in and do this as well. But what I'm seeing here and what I've got here in terms of these stats is that we can see throughout this bear market, Hyperliquid has performed extremely well in terms of revenue. It's making an incredible amount of money and it's staying very solid. Polymarket down the bottom there is also explosive. That's a parabolic growth curve on revenue. And meanwhile, Pump Fund, which is kind of the proxy of Memecoin, Memecoin FOMO, Memecoin euphoria, has just been steadily declining since that peak it had in January 2025. So it illustrates to me a very clear point. At the moment, meme coins have had their fun. The meme coin circus was brilliant for the chain. It made everyone love Solana. It made Solana the place to be, and it drove a huge amount of network activity. Now all that activity is shifting over to prediction markets and to Perps. This is 2 sectors where Solana has absolutely failed to compete. We have no hyper competitive Perps decks, and all of our prediction market products are actually built on top of Kalshi already. So look, it's a tough pill to swallow, but Solana is effectively sidelined on this. We need more competitive Perps decks. We need to get a prediction market that can actually go toe to toe with the likes of Kalshi and Polymarket. And at this stage, we're not seeing it. Thomas, are you thinking that Kalshi and Polymarket are right to go after the Perps market? Do you think they can compete against Hyperliquid? What's your read here? Do you suspect that Kalshi can actually pull one out of the hat and flip Hyperliquid in the Perps department?
It's going to be tough. I don't think that they can flip Hyperliquid at this point, right? Like look at all the volume on Hype. It's a beast at this point. However, Kalshi and Polymarket have the users, right? Like they have user base, like a big user base. They're, a bunch of people that are willing to bet on a lot of things. And Perps seems like a pretty natural progression, for those type of users. So I think it's a fantastic idea. Like I think that they should get into it. And B, I think they're going to do very well. Like, are they going to flip Hyperliquid? Probably not. but they're going to have, substantial volume is what I would imagine. Obviously that depends on the product that they come up with and, whether they can, actually compete on it. But I mean, they kind of have the roadmap for how Hyperliquid did a lot of this now. So, I mean, if they fork it and they have a pretty similar product, like they're going to do fantastic. I also, sympathize with what Jack is saying. Like, I wish all of this was on Solana. Like I don't see, those are the two areas where it's like Solana is great for speculation. We capture a lot of the metas, and these are the two that we're lacking on. So, to the teams out there that are building these, like let's go. Let's get these going. I'd love to see them. Succeed.
To just, I think to give a sense of how big of a challenge this is going to be now for Solana builders, I want to just put in a little bit of context here. Polymarket's now valued at $15 billion, right? Just June last year, so June 2025, they were valued at only $1 billion. So massive growth. Kalshi, on the other hand, fully regulated, has a much larger market share in the US, valued at $22 billion after a recent $1 billion raise. So for anyone in Solana who's wondering how on earth is that even possible, it's quite simple. Trump also said this: the entire world is basically turning into a casino. People want to speculate on things. We call it prediction markets. It is basically gambling. Now the combined year-to-date volumes of Kalshi and Polymarket are at $60 billion, and that's 4 months, just over 4 months, almost 5 months. And the full 2026 volumes are expected to reach $240 billion. So considering this is just 2 prediction markets, I think that's insane. And VC money is clearly, very, very welcoming of these numbers. People want high returns. It's going to be tough for Solana to compete. Last week, Thomas, I asked you, maybe it was the week before actually, I said, how likely do you think it is that Solana launches a hyperliquid competitor within the next 12 months? And we sort of spoke about Mert saying, look, it's not good enough to equal or be equivalent to hyperliquid. You essentially need to 5x what they're offering. Curious if you've changed your mind. You said to me 12 months might be a little bit too short of a timeline. Do you think now it's possible, it's impossible? Have you changed your mind at all?
I have not. So, I regret that answer, and I regret that I have to say this, but I still think that Hype has they nailed it. And I don't think it's just the product. Like, A, the product is fantastic, but B, it was, the first one to really catch on. And then the way that they airdropped so much money to so many people, they have a community that is like diehard at this point. Yeah. So they did so many parts right. And, I was listening to Kobe on Thread Guy the other day, and he was talking about how this was basically like the airdrop model done right. So one of the first examples of, a token being fully airdropped, and there's probably a lot of other successful airdrops, but like this is like the model. This was the airdrop that people are going to point to that worked, that combine that with a fantastic product. It's hard to beat. I don't know how you get to that point. But whoever figures that out, that is a massive market to overtake, right? So the opportunity size is so big that teams need to be going after this, right? So 12 months, a lot can happen. I mean, things happen so fast. I mean, especially on Solana, right? Like, development goes quick, sentiment changes really quick. Things can change on a dime. So, I would like to see that happen in less than 12 months, but for it to actually happen, it would be tough. I know that Finn thinks about this too. What are your thoughts?
Look, I want to go on the record here and say that I'm actually quite bullish and optimistic on Kalshi's perps, or even Polymarket's perps to that degree. So I think one thing that Polymarket and Kalshi have that a lot of crypto apps don't have is they have got a huge base of retail users. So Polymarket and Kalshi have done really well in getting people from outside of crypto, getting the normies into these apps and making them start bidding on all kinds of things. Now, if Kalshi and Polymarket start rolling out perps, all of a sudden that's going to bring a huge amount of retail liquidity to these venues. And there's nothing that market makers and high frequency traders love more than having a lot of normies and a lot of retail users to harvest unilaterally across the order books. So look, I think there's going to be a huge amount of flow going to all of these perp dexes. I think that Kalshi and Polymarket both got a tremendous amount of resources, and they'll be able to hire all the best people to make sure that this is an incredibly powerful tool. And finally, Kalshi is regulated in the US. All the Solana perp dexes are not. Hyperliquid is not. And a lot of volume actually goes through to Kalshi from apps like Phantom, who have just signed no relief clauses with not signed no relief clauses, but they've been given no relief notices from the CTFC. So look, I think the stage is set for Kalshi and Polymarket to do extremely well in this perp scene, and I think people are underestimating them.
Yeah. So there's a fine line you're striking there, Finn, between cynicism and realism. I like it. There is the opportunities there, the extent to which Solana sort of musters the strength to find the developer talent, find the need to do something urgently, I think is something that remains to be seen. We know people like Chase are championing this struggle. And speaking of people from Foundation, this next story is a bit of a banger as well. Toly's definitely not holding back here. He's dropped some bombs. We're going to switch over to story number 4. It is on screen. The headline is Return to Open Source Immutable Software. Solana co-founder issues challenge to DeFi community. Interestingly, Toly's put a challenge and there's a reward of 5 SOL in an experimental app called the Percolator Insurance Fund. He's publicly invited hackers to try and take that. Finn, I want to ask you in a second, why only 5 SOL? Because I would imagine most people aren't going to get out of bed for 5 SOL, not with these prices, let alone developers and hackers who probably don't need 5 SOL. But the challenge is there. I think he's approaching it from a values-driven, ethos-driven position. Personally, I'm a big fan of his take. And for reference here, you can see on screen, his tweet begins with reject modernity. Fairly confident that, as a tech founder, someone who was working at Qualcomm for years and years, he's not suggesting here that we devolve into some sort of primitive, anarcho-primitivist lifestyle. But what he is saying is let's go back to the origin, right? So DeFi was built on a certain set of values. Maybe it's time we sort of rediscover that. Finn, what's the context here? Why is the bounty so small? Who's going to get out of bed for 5 SOL?
Look, I love this story. I think this is a whole lot of fun. So Toly has been working on his passion project Percolator for a while. It's a perp dex that he's basically spun up with Claude. It's got a unique model where the meme backs itself essentially. And he has been working on this, I think, quite discreetly for a very long time. So amidst all this chaos that we've had with DeFi hacks and exploits and talks of social engineering, and we need to go back to the core fundamental DeFi tenets of immutable programs. Toly has said, look, I've posted the source code for this DEX online. There's 5 SOL locked in the insurance fund. If anyone can get in there, if anyone can break open my code, you can have the 5 SOL and I'll help you get a job in the ecosystem, and I'll find some angel allocations for you as well. So, the 5 SOL is small, to your point. Yes, that is true, granted. But if you can get vouched for by Toly to go and get a job in the ecosystem, or you get an angel allocation to who knows what, it's obviously a very, very mouth-watering prize. And it basically ties back to this idea that if the program is immutable, then there's no risk of people getting administrative access like we've seen in Drift and KelpDAO hacks. So it's a challenge to people to write bulletproof code in the first place, make it immutable, and then programs should actually be as bulletproof as they can be. I think it's a great idea. I think it's a lot of fun. No one's actually been able to do it yet. Some people have found some logic working that has been able to not exploit the protocol, but has revealed some weaknesses. I'm not a security engineer, so I'm not going to kind of dive too deep into the weeds with that. But I think it's a very fun game. Thomas, do you think that we'll see a lot of builders from across Solana start emulating this? Do you think we can start seeing immutable programs become commonplace? Or do you think we're still too attached to this idea of having upgrade authorities and everything so we can keep building on top of them?
Yeah, I think that we're definitely going to see more of it. Like I like this challenge. I like that it's all kind of being done in public. I don't fully understand Percolator at this point, but I like the immutable, like us moving more towards that. But the flip side of that is none of the smart contracts were the issues, with these most recent hacks, right? These were a lot more like social engineering, different vulnerabilities that people didn't find. But with the increase in AI and like Mythos is going to come out and hack everything supposedly. I think that having security like bounties like this is a good idea. I think that things are only going to get like more adversarial in general. But it's about 50-50 between like smart contracts, programs, and the human side now, right? So social engineering is about 50% of the attack surface. So I don't, this isn't going to solve everything necessarily, but it would be a step in the right direction, and it would help. And I think historically a lot of Solana has not been immutable up until this point, right? So to start a shift would be the right direction. But yeah, I don't know. It's exciting to watch. You know, I look at all the technical details that Toly talks about all the time with this percolator, and I still don't know how to put it together and say it coherently. I don't know if you want to get into that at all, but what are your thoughts on that, Jack?
Well, you mentioned something there about Solana not being immutable in the past, and that's historically been a massive source of criticism from the Ethereum ecosystem, right?
Yeah.
Story number 6, we are going to talk about a bit of tension between Ethereum and Solana. But for now, story number 5 is an interesting conflict to this. We've been talking about DeFi risks, DeFi optics, North Korea coming and eating our lunch. All of these things make people feel unsafe when they're on chain. Valid. $600 million lost. I think $620 million lost in a month is nothing to be scoffed at. Having said that, I'm going to switch over to story number 5 here. It seems an 88-year-old Singaporean bank doesn't really see the risk as being as significant as we do, because, as you can see here, the headline is OCBC brings $526 million physical gold fund on chain with GoldX launch on Solana. Again, these guys are a very old bank. Think about Singapore for a second as well. They don't do things willy-nilly there, right? Some people have said it's a bit of an autocracy. Regardless of what you want to say about it, it's a very beautiful, clean, pristine city-state. I think 1 in 6 citizens have net worths, over $1 million, right? You can't chew gum in public. Most people are a millionaire. Life is sort of good there. And they're taking things very, very seriously when it comes to tokenizing funds on Solana. $526 million is a big number. Again, I find it interesting because we're out here saying, I'm not going to deploy my $128 in DeFi. These guys have come and dropped much larger figures. So, Finn, talk me through the significance of this story. And I'm quite curious about this. Let's say I have gold exposure on chain, on Solana already. Do I love this story? Does this story make me even happier?
Well, look, I think people are happy to see more assets come on chain. People are happy to see more capital come on chain. Singapore's OCBC Bank is bringing its tokenized physical gold fund on chain, and is joining a sweltering list of tokenized gold that we already have. So we've got, I think, Xstocks, Ondo, Oro has also got a gold variant on chain. And basically, it's the world's oldest store of value. People want to have as many different varieties of it as they can. If you've already got gold on chain, you're probably not going to be racing to swap from one provider to another. But look, I think it's positive. I think the fact that all these TradFi institutions are starting to compete to get their funds on chain is more of a indication of where things are going. I think we can probably expect to see this continue to happen over the long term. And as the graph here points out in the newsletter, the tokenized commodities market is now worth $5.3 billion. And actually, I was surprised to see that Ethereum commands so much dominance of this. So Ethereum is absolutely crushing it on this graph, which surprised me in the sense that when we look at tokenized stock trading, when we look at tokenized commodity trading, the volumes happen predominantly on Solana. So while a lot of people are sitting there with their capital on Ethereum, a lot of the action, a lot of the flow is happening on Solana, which perhaps that's because that's where retail traders are, perhaps because that's where there's more arbitrage opportunities. Essentially, Solana is where the activity is happening, but Ethereum is where the money is stored. So I would like to see that change. I would like to see a bit of a flow from the old guard to the new. And yeah, look, it's an exciting time for tokenization. I believe you guys were speaking with James Seyfarth the other day, and he said that Franklin Templeton was bringing tokenized ETFs on chain as well. So we're actually getting more wide variety of what some of the biggest asset managers in the world are doing. What was your biggest takeaway from that conversation? Would you line up to buy a tokenized ETF in the next few weeks?
Well, 2 points on that. I'm curious what Thomas thinks as well. He said that these actively managed basket type ETFs are essentially going to be the future, because why would you not delegate some of your decision making to people who are actively scouring the market every day? And I think that makes total sense to me. But he also said that actually it's probably going to take about 10 years for us to get to that point. So yes, equities are on chain. Yes, metals and commodities are on chain. You can trade oil, perps, and everything's going great on Solana. But the reality of it is that ETFs are sort of the final frontier. And beyond that, tokenized ETFs are going to take maybe up to a decade before they happen. I think if you consider the sort of lack of friction there, you mentioned Charles Schwab is now opening up 3.6, maybe 36 million users that they have can now trade directly crypto from their wallets. So yes, these institutions are coming on chain, but he mentioned that the step before that, the prerequisite is that the rails are built. So institutions are building rails for other institutions, and it's potentially going to take a decade. TP, what was your key takeaway from talking to James so far?
Yeah, I think my like overall key takeaway is just like the overall appetite for crypto from TradFi is just huge, right? Like there is like a overwhelming desire for a lot of people to hold crypto, and they're going to do it in ways that they're used to, right? So an ETF that holds a basket of crypto assets is very appealing to somebody that doesn't want to go on chain. They don't want to open a wallet. They don't want to store things themselves. They don't want to be responsible for it. So to kind of meet people where they're at is huge. And just to hear like all these different ETFs, all the different ways that people are going to do this, like it just left me like very excited long term about where we are at. So I think there's a lot. It was a great conversation. I think you guys should check out the big picture. Next one comes back next Thursday, and always good to chat with them, right?
Absolutely. Now, in the interest of time, we are going to switch over to story number 6. There's a bit of tension between two ecosystems, but I think the takeaway from story number 5 and everything that we've discussed here today is that the institutional wave is real. It's accelerating. Guys in suits seem to be more bullish on Solana than we are at the moment. So let's see when we're going to have sort of the floodgates of liquidity opening and hopefully prices catching up with fundamentals, as we've been discussing for a long, long time as well. I'm going to switch over here to story number 6. This one's interesting. The headline is Traders Blame PvP Culture for Solana's Languishing Meme Coin Market. Right before we get into the honorable mentions, the stat of the week, the tweet of the week, Finn, what is going on here? Should we be concerned? Is it a problem that maybe outsiders, ethers are saying, hey, look, Solana Meme Coin Casino is dead? Should we be concerned?
I think the Solana meme culture isn't dead. It's just evolving, and it's becoming extremely efficient. It's being solved. It's becoming extremely competitive, and this has been put on display in a very, very large way with this story here. So the story started when a unfortunate late cancer patient desired that her plushie, her Shiba Inu plushie that was wearing an astronaut costume, would become the next SpaceX mascot. So this became a big story on Twitter, and obviously Elon Musk responded, and he said, you know, we'll check it out, something to that effect. And if you guys remember back to 2021, if Elon starts tweeting about Shiba, or if Elon starts tweeting about anything crypto related, some coins can absolutely go for it. And so as soon as Elon tweeted this, there was a litany of asteroid tokens being deployed basically across the entire ecosystem. Ethereum probably had a bunch. Solana had dozens. And it really actually illustrated what happens when a massive internet event gets commoditized and put on chain in the form of meme coin. So the Ethereum coin hit 200 million because everyone on Ethereum kind of rallied around it. Everyone poured their capital, their trading activity into one coin, and it absolutely went for it. Broke the stratosphere. 200 million is massive. On Solana, we had serial deploys. We had dozens of different coins fighting each other. We had PvP communities saying, this isn't the real one, this is the real one. And all the Solana coins basically failed to get past around 15 million. They sputtered out and they died very, very quickly. And the Ethereum one is still marching on. So a lot of people have said this tells a very clear story about how things happen on Solana. Nobody is able to work together to send a meme coin to a boggling valuation. And people basically just cannibalize each other to the point where nothing can ever succeed here anymore.
Are they right? So, is that valid criticism? Is it sort of an accelerationist take? Is this one sort of exception to the rule from which we're deriving a rule here? How accurate is that take about Solana's PvP culture?
Honestly, I think it's pretty accurate. I don't do a whole lot of meme coin trading anymore because of honestly for that reason. So culturally, Solana meme coin traders they cannot hold anything for more than a matter of seconds. There's so many bundle scams. There's so many trading bots going back and forth. There's very little organic activity and very organic interest in particular coins. People have a habit of they take their position and they want to dump, for 10, 15% and move on to the next thing because there is such a surplus of coins. There's so many coins, it's completely saturated. Nobody wants to actually hold anything. And we were speaking about this earlier while you were out with technical difficulties, but on Ethereum, the culture is very different, right? People have got a lot more money. Gas fees mean that you're not just going to hop in and out willy-nilly and kind of trade things as much as you can. If you're on Ethereum and you're trading meme coins, you're going to move in size, you're going to sit in somewhere for a bit longer, and that lays a floor with which coins can go a lot further. On Solana, it's very much a solved game. People want to get in and get out before they can get dumped on by people who've gotten before them, and it's not a very conducive environment for coins to actually do well. Thomas, you're probably the one deepest in the meme coin trenches of all of us. Would you say that this is a problem that's been solved and now can't be unsolved in terms of meme coin efficiency? Is there ever going to be a way for us to go back to a world where Solana traders can actually rally around one coin, or are those days over?
I don't think it's over at all. I think basically what happened right now is like liquidity's dried up and sold meme coins, right? Like there's no new buyers, there's no big runner, and like if you look at last cycle and how it happened, coins pumped on ETH and then Solana. Like I think it was Pepe that shot up to hundreds of millions of dollars first, and then that kind of like proved the market. It showed everybody like, hey, here's an example, meme coins can go crazy. And then meme coin season took off on Solana shortly after. Like I don't think those meme coin buyers are on Solana right now, right? Like I just think like they're not interested. It's not, people chase liquidity, they chase like the action, the volume, and they're just not seeing it right now. I think, it'll take a couple coins that do get launched up and we'll start seeing that again. And I mean, to be honest, like I still have a couple chats where like I'll go and look at them every now and then, and there's thousands of messages, and they're still calling 30K meme coins to each other on Solana. So it's like the trenchers are still there, like they're not going away. And I think that it's hard to make like 50 SOL in 2 hours on a meme coin and then go back to do anything else, right? Like I feel like people are going to have like that gambling itch, and that's what Solana's best for, right? Like I want to see the speculators come back to Solana, and I think that right now they're just not there. So that's the problem we're having.
Yeah, I think part of the problem is actually what you mentioned, and that people are sharing meme coins at 30K, at 10K, and the way it's played out is that the bonding curve has meant that anybody can acquire a stupid amount of tokens at an extremely cheap price. Launching a coin costs nothing on Solana, and obviously there's bonding curves on Ethereum now, but in principle, if you want to launch a meme coin on Ethereum, the developer and the deployer actually need to provide that liquidity, and they need to have a lot of skin invested in the game. And that basically sets a higher standard for what goes out. On Solana, you can send out 100 coins in a minute, basically using scripts, and that's not going to cost you anything. Whereas Ethereum, there's a much higher, I think, ceiling for what can be done. I think there's a lot more care and intention with coins that go out like this. As much as you can say you have care and intention for a meme coin, let's be real. But at the same time, look, I think it's an environment that rewards effort a lot more than what happens on Solana, which is a lot of pillaging of the trenches from what we've seen.
Final question for you both in that case, before we switch over to the honorable mentions. Is this goodbye Solana, or at least is this goodbye Solana meme coins? Is it goodbye Solana trenches, or are we just in a rut? Is this guy getting it right here?
It's an evolution. I think things evolve. I think meme coins in this particular format has been solved. The bonding curve game has been solved, but things will change. Something else will happen. A new meta will arrive. It won't necessarily be launched on Pump on Pump or on any other launch pad, but the desire to make a lot of money in a very short time is always going to be there, and people are going to find games to play that allow them to do that.
Yeah, yes or no?
I actually think the exact same thing as Finn. Like I want to be contrary and say something unique here, but it's like we're in a rut right now, right? Like the product market fit of tokens is just too good, and launching it on Solana is easy. They made it too easy. I don't know who's going to change, who's going to change that or who's going to come through, but I think that there's definitely going to be a market for this, no matter what.
Well, let's wait and see when that resurgence happens. In the meantime, let's move over to the honorable mentions. Finn, you've got a long list here of stories, headlines, bangers that didn't quite make it into the newsletter. Very important, nevertheless. Let's do a quick fire round through them. I'm really, really curious this week what TB's favorite is, because mine's very, very obvious.
Yes, so this week's honorable mentions. Super Team launches Super Team Black, an invite-only program for elite founders. Loopscale introduces Loops 2.0, the platform's biggest upgrade since launch. Cast launches USD Prime Vault. GSR launches a multi-asset crypto ETF, including exposure to Solana. Seeker closes Season 1 SKR claim window with 89.7% of tokens claimed across 90,000 wallets. Jupiter launches Clans, a social prediction feature in its Telegram bot. Ramp, a fintech firm used by 50,000 businesses across 200 countries, now supports USDT on Solana. Arkham Intelligence launches its Solana-based DEX. Tokenized stock volume hits new weekly all-time highs again. And the Syndicate Developer Report shows Solana onboarded 41,000 new devs in 2025. So massive list there. Jack, what's standing out to you?
I mean, as a longtime cast user, I was leaning towards that. Then, Jupiter Clans, I have this desire to see social prediction features actually work. There's been so many experiments in the past that have just sort of fizzled out, but it has to be that Seek closes season 1. The SKR claim window is closed. Almost 90% of tokens were claimed by 90,000 wallets. And I love everything that the Seek ecosystem is giving us at the moment. But I'm curious if this has something to do with the price spike that we've seen over the last 24 hours. Regardless, this is my favorite one because it means that Seeker Season 2 is active. It means that if you're a developer, it's a great time to go and deploy. I think there's over 800 dApps now active on the Seeker store. There's over 10,000 daily active users, as Finn was mentioning last week. These aren't people that just go in and do their sort of morning swaps, if you will, for the sake of saying, I'm here, I've done something, but they are actually using the phone every single day. Over 150,000 devices were shipped. We can expect new hardware devices. So I don't know, everything Seeker does just excites me. For that reason alone, it's going to be that story. TB, any thoughts?
Yeah, I'm going to go with Ramp on this one. I've used Ramp a couple times at a couple different startups that I used to work at. So it's a fantastic product. And I mean, 50,000 businesses use it. And all of these businesses know about stablecoins. So it's like, hey, here's the platform. Check it out. Use some stablecoins if you want. Like, I think that's a pretty big move. So I'm excited to see that.
Finn, what's your favorite? I feel like sometimes we don't ask you. I feel like you write all these stories, and I feel like sometimes we don't ask you what your favorite is. So there's got to be something that stands out.
Yeah, look, as you both know, I'm an unapologetic loop scale enjoyer. So for me, it's going to be Loops 2.0. Awesome update. There's a new execution engine. They've expanded asset coverage. There's an internal router that goes and aggregates liquidity across all platforms across Solana. So look, this is a massive upgrade for loop scale, and very, very keen to dip my fingers into it and see what it's all about in practice. I haven't actually been able to get into it yet because they only released it a couple of hours ago while I was prepping for this. So look, it's got to be loop scale for me.
Cue the next 1 million loop scale points for Mr. Finn Miller in that case. All right, stat of the week. What do we have here? This is a chart. It's going up and to the right. Is it a good chart? Is it a great chart? What's going on?
This is a great chart, Jack. This is a fantastic chart. So in Q1 2026, non-vote transactions on Solana hit a new all-time high, while true TPS averaged 1,303, the highest ever recorded. So look, markets are bad. Yes. People say on-chain is dead. Yes. People say that crypto is dead, never coming back. People say DeFi is over. The proof is there that actually more stuff is happening on-chain than ever before. We have more non-vote transactions than Solana has ever seen. Our TPS is the highest it's ever been. Our true TPS is the highest it's ever been. Look, it's all happening on Solana. It doesn't matter that people think that crypto is over. Solana is building the rails that people are going to use in the future. The evidence is there.
Crypto's been over so many times.
Many times.
And every single time something happens, and then prices start zooming, and everyone's like, "Oh, I feel it's sidelined again." And we prove to everyone that crypto is not dead. Probably will never die in that sense. Prices are incredibly suppressed, but let's see what happens in the coming months. I remain bullish and optimistic. State of Solana in a tweet. This one's interesting. Take us through it, Finn.
Yeah, so we were discussing earlier about how on Solana there is this culture of bundling coins at as low a valuation as possible. CryptoLex here is saying that Solana Vamp tools now found their way to ETH. At this point, it's probably a cultural thing. There's no single piece of tech to fix the trenches. It has to be a mindset change. So after the events that we've seen with this Asteroid coin, a lot of people, a lot of Solana users, they're bridging over their, we'll call them farming tools for lack of a better word. This proves that the culture that Solana has built around Memecoin trading in the trenches is actually spreading over to ETH off the back of this coin. And it sums up, and it basically states that we can expect to see the trench activity that has plagued Solana for a long time now start taking place on Ethereum as well. So in this way, meme coins in their current format will never come back. As I've said, the game has to change. People need to find new ways of launching things outside of a bottoming curve that starts at 6K.
Absolutely. Now, just before we wrap up, TB, you've been covering some very spicy stories this week. You've covered DPRK and DeFi, but you've also been spending a lot of time with AI agents, specifically AI agents on Solana. So curious what your sort of takeaway from doing that 3-part series on agentic commerce has been. Did anything shock you? Did you lose a bunch of money? Did you make a bunch of money? What happened through your experiments? Give me a quick little TLDR.
Yeah, I mean, overall, it's like I'm so bullish for the combination of those two, right? Like it's the two most exciting technologies that we have. I personally made like $2 with a trading agent that I made. I put like $70 in there, but I probably lost like $200 in tokens and credits for building it and running it, right? Like the tools are very expensive to run right now. So like I've decided that I am no longer going to build these tools for myself, and I'm going to rely on other people building them. And people are building them. Like there's one called Spawn. Shout out to them. They have like I don't know, a bunch of people that follow our videos around and tweet them all the time. But I was talking to the founder of it, and I mean, it basically is the tool that I was trying to build, and it's a way better form of it. It's just primarily about meme coins. So if it wasn't for, they're trying to trade meme coins all the time, right? So like I ran one of their agents for a little while, and it was like 50 trades in like an hour. Like it's insane to watch all the meme coins that are still going on somehow. So I think it's a fun way to interact with crypto. I think that it's probably like what people want. Like I said, people want like baskets of assets, but people also want exposure to crypto. They just don't want to get rugged, right? So like the agents are so quick, and they'll catch a coin that's getting rugged and they'll sell it in that same second, right? So you don't get rugged. It's like all of the upside of meme coins and none of the downside. So I like it's like tremendously exciting that they're able to do this. And like I don't even want to know what their compute cost is or how they're actually getting all of this like real-time data in to do this. But like it's exciting. Like I think when meme coins do come back, like I will be in the agent trenches like that because of that. So I think that there's a lot there, and like I think agents are kind of unapproachable in general right now. So like for you to run your own, I don't think everybody's going to be doing that right now, right? So I think what you're going to do is look for different platforms. I know there's like Milo is good. Like I said, Spawn's pretty good. So there's going to be more of these, and it might take away a lot of the negatives that we've seen in crypto. A lot of people that bundle all these coins and, all of the insiders, they're only able to make money because the people that they're dumping on can't act quick enough. Well, what if they can act just as quick? So it's like it might take away from some of the negative aspects, but I think overall it's just like exciting to see. So I'm like, that was the most fun that I've had actually making a series, because like I was getting so frustrated with what I was finding that I was like, screw it, I'm just going to build this. Let's go. Let's see how far I can get. So it was fun for me to build, even though I lost money on it.
Well, you definitely did the hard work for us, tried building some of these agents out, discovered that other people have done it far better. So, I mean, I appreciate you, because I would have definitely done the same and then lost equal, if not more amounts of money. Now, for everyone listening, if you do want to go and check out those videos, it's a 3-part series on how to build, how to use, how to deploy these things. But I think takeaway for me from listening to you, Thomas, is it's more of a tutorial on what not to do, which actually might be more valuable, right? It's not just, hey, go and do these things, but if you do these things, you're probably going to lose a bunch of money on chain. So great videos. Go check those out on SolanaFloor's YouTube account. And if you want Finn's full newsletter that we talk in great extent about every week, then you can go and join thousands and thousands of readers at SolanaFloor.com. You can subscribe to his newsletter. It is free. It's funny. Sometimes it's a bit salty, but it's absolutely worth your time. You will learn a lot, I promise. Finn, Thomas, with that, thank you both very, very much for joining me today. And I will see you both next week. Hopefully another green week.
Indeed. Thanks again.
Yeah, thanks, guys.
Take care, guys.